Alright guys, welcome back to Amir Stocks, where I basically sit here and talk to you about my knowledge of stocks and share what I'm doing in my portfolio. So today, February 8th, was a really nice Monday morning. Tesla actually ended up investing a couple dollars, a good $1.5 billion into Bitcoin, which actually caused my one Bitcoin to go up. So if you're new to my portfolio, I have it open right here on the right on Robinhood. I've got these Sundial, which is a penny stock, and Liposign, both of which are penny stocks. I can talk about that as well. That's going to be part of this video also, what I do to invest into penny stocks. I've got from Apple downwards are basically all dividend stocks. They're all stocks that are going to pay dividends all the way up to TCHY, Tencent. Then from here down, these are just other stocks I've invested into that I know are going to come back up now. Like, for example, the airlines that are now starting to go up because of vaccinations and stuff. A couple other things that I invest into because of chit chat that I hear. At the very top, after the penny stocks and before my Apple, where all the dividend stocks started, the ones in between here, which are clearly pretty minus, were mistakes I made, right? Because they happen. Mistakes happen, and I leave it right there because there's nothing to hide. You learn through mistakes, right? So if I made mistakes, I don't have anything to hide about that because that's actually how I have developed whatever I've learned, right? And on the left, you're seeing some of the tools I use for my research. So for example, you can see I have 3 tabs open with Yahoo Finance, which allows me to check how much dividends they pay, right? Different individual stocks are paying. I use webull for my research purposes as well. And then I have this stock charts open. There's another website I use called FinViz, which is actually open right here. So there's a lot of tools out there, right? There's a lot of tools out there, and if you want to get good at this, that's going to be another thing, right? So basically what you can look forward to is a nice array of videos on various topics regarding tools to use to analyze stocks before investing into them, how to know what stocks to buy. Like, for example, clearly there was something I must have known to have had invested into Sundial, a penny stock, and bought 1,000 of it, right? Which clearly has successfully gone up. And what to avoid, because of course I've also bought things that were skyrocketing at some point, but then I lost out, right? So I clearly learned a lot there. I'm going to talk a lot about dividend portfolios, what I'm doing, what I'm learning in terms of developing a portfolio of stocks that are going to be paying me via passive income within the next 2 to 3 years. I've already started getting money back from them, but it's not really that much. I mean, sure, it covers my gym and Netflix subscriptions and stuff, which of course is always nice. There's a lot more that I can get covered over time as I develop them more and more. And then I'm going to talk about the most interesting chatter lately, crypto. So right here you can see I have 1 Bitcoin. I've bought the penny crypto, doggy coin, 50,000 of them, and then 25 Litecoin, because if you don't know, then Litecoin and Bitcoin often tend to trend the same way. So when Elon Musk invested a bunch into Bitcoin and actually made Bitcoin go up to 44, actually almost 45K this morning, Litecoin went up as well. They go together. That's kind of how they are. Ethereum also tends to follow the same pattern. Dogecoin, though, however, does its own thing, and it's supposed to be a joke of a crypto. It's actually named after the doggy meme that used to be around and pretty popular last year and even before that. So now, lately, though, because of certain things that have been happening in social media, as you may or may not be aware of, tweeting and talking about things on social media platforms like for example, on Reddit even, with the Wall Street Bets Reddit forum, has actually been manipulating what's going to happen to stocks, right? So that was the major thing that just recently happened with the short of GameStop. If you haven't heard about that, that's going to be, once again, another video I look forward to making at some point just to break it down. I mean, I'm sure there are enough videos out there breaking it down, so I probably might not need to make that video, and you guys can find out about it. But I'll still talk about my input on that and whether or not there's going to be another GameStop, another stock that might be looking like a dying stock belonging to a failing company, which all of a sudden just skyrockets because, of course, a bunch of people decided to get together and invest into it, right? So that's something. Now, the other thing you're seeing over here on the bottom left is what I do for my research, right? So this is something I made a video about not too long ago where I showed the stocks that I was looking up, how I was looking them up, and what they meant for me, right? So dividend stocks, there's two types. There's the dividend stocks that pay quarterly dividends, and then there's dividend stocks that pay monthly dividends. Now, of course, how much dividends they give really is something you have to compare based off of monthly versus quarterly. So for example, if you're comparing a stock that gives you monthly payments and another stock that gives you quarterly payments, you can't compare the amount that they give when they pay. You would have to compare the 3 payments from the monthly guy to the 1 payment that the quarterly guy is making, right? Because they pay every 3 months. And oftentimes what happens is that there might actually be monthly stocks that end up paying you a lot more for the same period of time, right? So that, for example, you could see that here, for example, here, let's look at, for our first conversation, let's look at AT&T. That's one of my top favorite dividend paying stocks, right? So I think I have 400 of AT&T. Their ticker symbol is just T. So that's going to be right here, right? So I have 400 shares of it. And then we're going to see, so AT&T, generally speaking, gives you $52 if you own 100 stocks of it, or their actual payment is 0.52 cents per stock, right? So $52 if you own 100 of it. I like to look at the 100 factor because that's my goal. My goal is to eventually start having thousands and then 10,000s and 100,000s of these stocks over time, such that the amount of money they give me would go from 52 to 520 to 5,200 and so on. And then, of course, eventually that'll become enough money that it's going to feel like passive income, right? If I can make 30 to 40K every quarter, or even 10K every quarter, then it's 40K a year, right? That's a good starting point. That's going to be my first goal to reach at some point. I haven't reached that point yet. That's not even my next goal right now, but that will be a future goal of mine. That being said, I like to look at these numbers because it's a little better to work with for pretty much everyone as opposed to working with decimals, right? So if we look at T, if you own 100 stocks of AT&T, you will get $52 every quarter. So every 3 months, you're going to get $52 for 100 stocks. If you own more or less, then you'll get a variation. So compare that quarterly paying stock number 3 over here, AT&T, to a monthly paying stock like Maine, right? So Maine is another stock that pays 0.2 cents per stock, and it pays it in a monthly manner. So if you own 100 stocks of Maine, every month you'll get $20. Now, if you compare Maine and AT&T, right, it's a perfect comparison to make because of the fact that they share a similar price value, right? AT&T, when I made this note, when I made this Excel, which was last edited 3 days ago because I guess I added some things at the bottom here. When I made the Excel, its price range was $31.60, AT&T, and Maine was $31.48. If we look them up today, so AT&T is right now $28.76, all right, and Maine, which is Main Street Capital, is $33.69. It went up more, okay? So I own Maine as well. I have 10 shares of it, and I look forward to getting more. So what we're seeing is that we're comparing two stocks that have a similar price range, right, plus or minus 5, and T would be giving me $52 in 3 months for owning 100 of it, and Maine would give me $60 in 3 months for owning 100 of it. So clearly there's an $8 difference and a better benefit in investing into Maine, right? So that being said, there are other things to consider as well, right? There's a reason why I have bought 400 shares of T and only 10 of Maine. And that's because AT&T is a far more superior company, right? So this is another thing you have to look into. AT&T is a very powerful company, and as the stock prices go down for now, it's actually something I'm happy about because that means that I can buy more of it. Right? This stock price decrease is not so significant that it will actually hinder the dividend price. So that's another thing you have to watch out for. Sometimes the value of a stock goes down so much that the dividend payout that they would be giving you also goes down. But then come the concepts of dividend aristocrats and dividend kings. These are groups of companies that pay out dividends regularly and have been increasing or maintaining how much they've been paying you in dividends for the past 25 years for aristocrats and 50 years for dividend kings. So that means that they're pretty stable, and no matter what's going to happen, as you know, for example, the COVID pandemic, they're still going to go through, and they did, right? AT&T, as well as many of these, or pretty much all of them, as far as I know, I haven't checked them all, but mostly all of them, the dividend aristocrats and kings have continued to pay their dividends through the pandemic. And if you could pay dividends through the pandemic, you're going to be fine paying it even out of the pandemic and other times. So the fact that this has gone down is actually pretty nice for me because I could buy more of it. And it makes me happy that I can invest more into it, right? And then, of course, because this is AT&T, not just a small-time company that isn't that important, it will come back up. And how do you gauge whether or not a company is a small-time company or a significant company? You basically look at their market cap. Right, their market cap is clearly humongous, 202.46 billion. Right, so they're not going to be shutting down. And of course, AT&T itself is a company that everyone in America knows very well. That's one of your major telecom companies. So it's not something that we look forward to disappearing at any point. So that being said, I'm actually pretty glad that this is going down. My average cost on it is 29.42. The first time I bought it was pretty expensive. So if we look at my history with them, we could see, I got my first dividend payments from them February 1st. I got exactly $52 because I had owned only 100 shares. I only had 100 shares. I got dividend payments here. These February 1st payments are for the 100 shares I owned here, which I actually paid $30.87 per stock for. Okay. So then later on, as it started going down, it went down to 29 and then 28. I picked up more. Right. So these guys here, the 200 plus 50 and 50, so the 300 more shares that I have here, I didn't get dividends for because these were bought outside of what is called the ex-div date. So that's something you can see in, for example, webull, right? So if we're looking at, let's actually look at AT&T here, right? So if we look at AT&T here, right, on the right side here, you're going to have your key statistics, everything that you need to know as far as buying stock is concerned. Their new ex-div date is January 8th, 2021. So basically, any stocks I bought before January 8th, 2021, I would get paid for. So that was actually just this. Right? Because then you can see I bought this January 19, 26, February 1st, February 1st. They haven't updated the next ex-div date, but basically all of this is going to fall into that. They're going to have another ex-div date update soon, where they're going to give you maybe, for example, if I was to just make something up, maybe it'll say like June 6th, 2021. So then that means that only for the stocks you bought before June 6th, 2021, you're going to get payments of dividends, right? And then here you can see the rest of the information too. So their dividend is $2.80. That means that that's how much they're going to give you per stock in a year. And that's how you get the 0.52. Right, so 0.52. But this dividend 2.080, if you take 0.52 and multiply this by 4, you would get the 2.080. Right, because that's what this quarter is. You're going to get 4 payments, a payment every 3 months. Right, so in a year, I would get $2.80. That's what this dividend number here means for a quarterly paying dividend stock. So in 1 year, I'm going to get $2.80 for owning 1 stock of it. And if I own 100 stocks of it, then you just multiply this by 100, you're going to get $208 basically, right, if you own 100 stocks of it in a year. Okay, but I am going to have more by the end of the year, and I'm looking forward to getting a lot more from AT&T. As far as Main Street Capital is concerned, again, where you invest really depends on how much money you have available to invest. So if I had enough, that would be one of my other top favorite stocks to invest into because they would be paying monthly, and they actually pay a little more than AT&T does. But that little bit more, the $8 difference that we talked about here between the 0.52 and the monthly 0.2, right? The quarterly 0.52 and the monthly 0.2, that little difference actually adds up, especially when you start amplifying by owning 100x or 1000x or 10,000x of a certain stock, right? So one of the benefits you'll have from basically listening to me chatter on about stocks is that I'll be able to share with you what I'm investing into. And as you're there, it'll of course be up to you to decide if you want to do it as well. On the other hand, this is also a form of paper trading. You're watching me trade. You get to see the mistakes I make and the benefits I gain, and you get to see if those are basically I'll be earning credit for myself or losing credit, right? Because if I made mistakes, then I have to be able to justify how I made that mistake. And if I made a good plus, I should be able to talk to you about how I was able to foresee that this is going to be a good plus. There are many ways to foresee a good plus coming. Besides the technical analysis aspect of things by using stock charts or FinViz, both of which are websites and apps that I'm going to teach you guys a little more about, talk to you about how to use them. You don't really want to learn about them through TikTokers, for example, All right, there's a couple things to watch out for, which we'll get to. But yeah, I'm gonna be sharing with you guys what I'm gonna be doing to figure out whether or not a stock is worth buying. Right? There's a lot of things involved. There's looking at the general consensus of how stocks overall are doing. There's the aspect of looking at what's happening with all the things involved with the stock. For example, right, Sundial is a stock related to cannabis. So right now, with Biden becoming president, him and his group, his whole board has decided to move towards possibly making weed legal, right? In certain, of course, limited uses, not just openly legal, but make medical marijuana legal for sure, right? Much more legal and much more widespread legal, and et cetera, et cetera. So there's a little interplay that's happening there, and because of that potential news, it was very likely that Sundial, a penny stock related to cannabis, is now skyrocketing. Right? So when I bought it, it was worth 0.67, right? 67 cents a stock. I bought 1,000 of it. Now it's double the price, right? So I'm almost at 100% profit there. Right? 0.67 doubles up, it'll become 1.32. Then I'll be double the price. So I'm getting there. Point is, though, I knew this was happening because I kept up with current events. I kept up with what's happening around, what kind of news is happening around it, and so on. And then, of course, being a medical student, I often see upcoming medical things that are happening with relation to medically related, healthcare related companies. So, for example, right here we have this company called Liposign. This is a clinical stage biopharmaceutical company which engages in the research and development for the delivery of drugs using proprietary delivery technology. One of the most common types of penny stocks that just randomly skyrocket are actually medically related, pharma related penny stocks. This one I only recently heard about, so I actually bought it at a pretty high price. But I have a feeling that it's going to go up a lot more. So I am, although I am green right now, there's a chance that it might go down. And if it will go down, I'll make sure to just, either hold it for the next huge uprise because they are working on a couple things I looked up, or maybe just get rid of it if I need the funding. But it's not really that big of an investment, right? It's not that big of an investment. It was just $308 into it, so whatever happens, happens. Now, if you look at on Robinhood, if you actually go to the top movers, then you can see most of these, for right here, from these four, already you can see that most of them are healthcare related. Ocugen, which has gone up almost 200%, is actually a company related to therapies, right? Commercialization of therapies for eye diseases. So once again, because that's what it's called, Ocu, for ocular stuff, right? This is a company that's also related to medicine, right? Pharma. The other two guys that we just looked at right there, Aria Sciences and Cassava Sciences, which have also skyrocketed, are also related to pharma. Right, so this is a really big thing to watch out for. For example, Aria Sciences here, these guys actually do a bunch of investment services that are related to other companies that have assets regarding pharma. Right, so that's another reason that you want to make sure you keep up with this. You see this big jump, this kind of big jump that we're seeing within the last month, where it went from 11.22 and practically doubled all the way to 22.66. All of a sudden, on February 5th at 3 p.m., this kind of a jump happens almost only, well, very commonly with stocks that are related to pharma. So it's a very important thing to watch out for. So being a medical student, I try to keep up to date with the current events that are happening in various industries that are doing research for Alzheimer's, doing research for Huntington, and so on, right? Diseases that are not exactly common, but also they don't really have much treatment, right? So just because there might only be a certain small percentage of people actually suffering with a disease doesn't mean you don't need to treat it. So of course there's research going on, and I'm also someone that works in clinical research, right? That's my actual job. So it's easy for me in that aspect to have a way to keep up with what's happening in daily pharmacy. Right, and that's something that I would update you guys on. This is why I'm combining this with my medical aspect, because I can actually talk about both things and relate to why that would be helpful, right? And of course, all of us med students, at some point, we need to start investing our money so that by the time we start making even more money, we have better investments and better setups already going. Because none of this builds up in a day or even a year, right? This is stuff I've been working on towards over 2 years now. right? And slowly I have been able to come to a point where I now own 1 Bitcoin, I own a couple of dividend stocks, and they're all paying me. And so that's something that you always want to make sure you are checking up on yourself for. Now, if we go over here and we look at all the dividends I've gotten, right? So here we can see right now there's a bunch of pending dividends that I'm going to be getting for this upcoming next month. But right now in January, what did I get? So in January, we're going to count the Feb 1st payment of AT&T. I got from Gladstone Investment $7, Annaly Capital 22, Prospect Capital 30. Right, this is all the stuff I got basically in January. Right, so almost what is this? 52, 62, 72, 74 plus 7, 81. So it definitely broke over $100, right? Just passively. Didn't really have to do anything for it besides owning the company, right? And then next month I'm getting another group of payments from some of these that are actually monthly payers, right? That now will start paying me because I own some of them. So right here, Main Street Capital, the one I only own 10 stocks of, will be paying me $2, right? And then so on and so on. The more you own, the more you get. And if the companies start doing really, really well, sometimes what I like to look for is, if a certain company has gone up by a really grand amount, I might even consider selling them. But it really depends on who they are. For example, Apple has gone up $300 ever since I bought it, but I don't plan to ever sell it, right? There's no reason to. This is a stock that will continue to go up. And on top of that, they give dividends, so I'm happy with it, right? For the last year, ever since the pandemic, right? So almost every single company has this dip right here in March 20th because of the pandemic starting and lockdown starting and stuff. But generally speaking, this company has been going up since forever, right? Because that's just what Apple is, right? You make a product, people will buy it, no matter how shitty it might be. So that's just what's happening with them, and I'm proud of it. I'm like, I'll gladly own the stock. I don't care if I don't really use Apple products. The stock does great, and I'm happy with it. And they have this tiny little dividend yield they give, which is whatever. I'll take it. But the company is going up. This stock is going to only appreciate in value. But then there are some stocks. For example, I bought Lumen not too long ago. Right, so if we look it up, Lumen was a stock I found doing some research, and I have it right here, number 17, that seemed to have a really good ratio between the price of the stock versus their dividend payments. That I was really excited about. It was a pretty cheap stock, and they were giving $0.25 per stock. So I was like, this is actually pretty good, because to me, this was a pretty big payout for how cheap the stock was. So I actually ended up buying a couple of it. Right, so right here we can see the history I had. So where's the full history for it? Let me see. How come they're not showing how much I bought it for? Messages, and let's look up Lumen right here. So now we'll see all my history regarding Lumen. Oh no, not right there. I meant to search Lumen here. Shouldn't be, yeah, there you go. So I had initially bought 40 shares of Lumen, just 40 shares of Lumen at $10.54. Bought another 60, right, and that went to $11.64. It was starting to go up, and then I bought another 100 at $11.26. That's how much I invested into it. So the most I paid was $11.64 for 60 of them. Right, that was all the Lumen that I bought, and then after buying it, it just started going up so much that I had no reason to wait for dividend payments. Because look at it now, it's $12.37, and I sold it, still pretty cheap. I sold it at where is it? $11.81, which was pretty good for me. I had a pretty good profit out of it, which would have been much more than what I would get from dividends that I would get from this company. And this is a pretty low-profile company that has actually just been going downwards since forever. Right, so I was happy to buy a bunch of it because I was like, it really can't go that much more down. And I checked on Yahoo, and they were still paying pretty good dividends. They've been paying $0.25 per stock every quarter. So every 3 months, you're getting 25 cents per stock you own. That's great. If this company keep doing it, I'll gladly buy it at one of its cheapest prices right now. If by any chance it starts coming back up, that's excellent. And clearly, even after I sold it, it has still gone up. Right, but I didn't want to hold it. I wanted to get that money back out and invest it into another dividend stock because I was like, this is a pretty big jump from a company I didn't expect to have a jump from. And so goes the story of things that happen in the world of stocks. So that being said, follow, subscribe, listen, and just, join me on my journey, learn more from me, and then do whatever you think is best. But it'll be a great time to together, see what I'm doing, catch my mistakes and laugh at them, and see my success and be proud of them, right? So thanks a lot for watching. Be careful. Don't listen to people who want to teach you stuff over a Discord channel or something. Don't heed the words of TikTokers too much. You're going to end up losing a lot of money. You could listen to them, but don't follow their instructions. You can hear them out, but don't actually do what they're suggesting doing. And use your own brain. Use your own brain. Be safe with your money. Thanks a lot for watching, guys, and I'll see you guys again later.